Get started with the new weekly outlook. As always, we're going to start off with the fundamentals and then move on to the technical analysis. So in the first half of 2022, what we have seen so far is a shift from accommodative monetary policies, moving a little bit towards contractionary monetary policies, where we're starting to see interest rate hikes across all central banks. So last month, in June, we saw an aggressive approach from the Federal Reserve when it comes to interest rate hikes, where we were expecting half basis point hikes, but we end up seeing a bit more aggressive interest rate hike. So now the sentiment that we are starting to see going into this month is, can we continue to see those interest rate hikes, but at a slower pace? So instead of 75 basis point hikes, does it maintain at half basis point hikes or maybe 25 basis point hikes? So a slowdown in the interest rate hikes, or just maintain it for the next couple of months until we get economic data to support further interest rate hikes? Or do we need to see interest rate cuts, which is what the market is starting to prepare for later this year or even the beginning of next year? Right now, what the Fed has said is that they're going to shift their focus from simply interest rate hikes into setting monetary policies, as they are going to continue to assess incoming data to support, again, the interest rate hikes or interest rate cuts, and which way they're going to be pretty much headed to support the economy and the consumers. So for this, what we need to pay attention to is going to any CPI data, any employment data, any consumer spending data, consumer expectations when it comes to economic outlook, and even for businesses. And that's going to give us a good understanding of where we're pretty much headed. As we continue down, for the most part, we can see that the traders are starting to price in those expectations. The traders are starting to price in a lot of the sentiment of whether or not we are going to see a continued interest rate hike in the next coming months, until finally we start to cut back on them by at least 50 basis point next year, early next year, or even later this year. Now, with that being said, we're going to go ahead and move on to the next article here, which is UK households can withstand rates of up to 5%. Which is what Bank of England is saying at the moment. So pretty much in this article, you can continue down and read the details, but pretty much what they're saying is that Bank of England is going to continue to increase their rates, their interest rates, in order to control inflation, but they're also paying attention to, again, the consumers, what's pretty much happening there. But right now what they're saying is that that's not something that they're worried about just yet, because the consumers can withstand higher rates, and they are not at the point where they have to worry about any sort of a housing market strain or surging mortgage defaults just yet. So again, same thing here. What we want to focus on to kind of understand what's the economic outlook like, and what are the type of decisions that we can expect to see in the next coming months. Data point are going to be CPI, RPI, PPI, consumer spending, and any consumer and business economic outlooks. So these are two articles I want to quickly go over that are kind of just recaps of what we have been seeing so far anyways in the first half of 2022. But now as we're moving into the new quarter, the sentiments are just pretty much being carried over. And now we're starting to see more signs and more market sentiment of economic slowdowns happening across all economies. These are just two examples for the US and the UK. But if you're looking at Canada, if you're looking at any other region, it's pretty much the same exact sentiment, where we're starting to see economic slowdowns happening. Now, moving on to the economic calendar here, we started off quite easy on Sunday. Not much had happened. As you guys can see, a lot of low impact news. Yesterday was a US bank holiday, same thing, a lot of low impact news. And then we had the interest rates coming out from Australia. Coming into today, again, a lot of low impact news, not too much happening, not too much high impact news. And the high impact news pretty much gets kicked off tomorrow when the job openings come out from the US. And then also we have the FOMC meeting minutes. So those are going to be the two fundamentals that I would personally be paying the most attention to tomorrow. And then going into Thursday, we have ADP non-farm employment change. You also have challenger job cuts. All of this is preparing you for NFP that's coming out on Friday. So again, this is going to be very important to pay attention to, because we do have US interest rate news coming out at the end of this month. All this is pretty much going to be consolidated into that decision of whether or not we can continue to see interest rate hikes, or are we just going to maintain it at the same level that we're at right now. So on Friday, you have non-farm coming out, you have the unemployment rate coming out, and then also the average hourly earnings. So the highlights of this week really start off tomorrow, where you have the job openings, the FOMC meeting minutes, and then you have the ADP non-farm employment change on Thursday, and Friday, you have NFP coming out. Now let's go ahead and move on to the technical analysis. We're going to start off with GJ here first. So we're going to start off with the quarterly time frame, take a look at what's going on here. So the very first level I'm going to mark off is going to be this resistance that price is respecting at the moment. This is exactly where the last quarterly candle closed and the current one opened up. As you can see, there's really no top wick forming here on the current quarterly candle. We're still maintaining a bearish pressure since the beginning of the quarter. And again, it's only been a couple of days. So this could, again, just be a bottom wick rejection for us to continue pushing bullish from this point on. What we do need to see here again is going to be that economic data that we need to pay attention to. If you're looking at both economies side by side right now, then of course, as we have been talking about for the last couple of months, Japan is extremely weak. They're maintaining their negative interest rates. They have their, the bond purchases, the bond intervention that they've had going on for a couple of days, and they're still continuing it right now. Whereas when you're looking at the UK, they've increased their interest rates. They've put out this sentiment that they're going to continue increasing interest rates right now to control inflation. And so when you're looking at both economies side by side, then clearly you see that the UK is a little bit stronger. But when you're looking at global economics, then you do see a slowdown happening overall in global economic growth. So as of right now, as a new quarter starts forming, we do want to give price enough room, enough time to make those bottom wicks, those top wicks, and kind of adjust the movements that we have been seeing in the last couple of weeks before quarter two ended off. So as of right now, the first level I'm going to mark off is again going to be 165. And then after that, what I do want to pay attention to is going to be around this level right here, which is at resistance. And then also if price continues breaking below this, then can we come back down into these areas? So this is going to be the first range that I really want to pay attention to this month. And that's at 158,800 area. Then we drop down to the monthly time frame. So here on the monthly time frame, if you want to narrow in your price action, then you can do that here as well. So here, what I want to pay attention to is going to be right at this level right around here. So what I want to see is, can price still hold on to this area of support as it has the last couple of months, just make a bottom wick and then flip back up? If that happens, then again, we're looking for potential buy opportunities coming up to 165. If not, then I want price to clearly break below this. So then we can look for those clean sales coming down to 158,800. As long as price is in the zone, I'm not necessarily looking for any swing trade opportunities. Potentially some scalps, but other than that, I don't see any long-term trade opportunities here. When we drop down to the weekly time frame, we start to see how price consolidates out here in this little range where it made that top wick rejection and then closed right below it. The following candle took us right back down, creating some supports right here, which is also a corrective move of this entire bullish momentum. We push back up here and then we kind of hang around this area for a couple of weeks. This week, we've already made that top wick rejection, flip back down. So again, if we end up breaking below this zone, we are going to be breaking below the previous weekly low, and then we can look for those sales opportunity coming down to 158,800. But other than that, that's another reason why I'm staying out of this little zone here. We go down to the daily time frame, same thing. We see some messy price action here, but every time price does tap into this area, we do see some volume in one direction or another. So same thing here, you get a nice little break and retest and you get some nice volume to the upside. Same thing here, you get some nice volume to the downside and wick rejections, and same thing here, right? So that tells me that this is an area of liquidity. We just need to wait for price to break out of this zone in one direction or another, and then we have great momentum. If price pushes back up, then I do want it to continue breaking above around this area right here. So then we can clear out of all this little consolidations that have been forming here, a lot of wick rejections, and then we have a swing trade opportunity to the upside for potentially around 180 pips, could go up to 200 pips depending on your entry. But anything in between, this is going to be my scalp zone. So I'm going to be looking for some scalps here, potentially even day trade opportunities. But if price is in either of these zones, I would not be looking for any trade. Now, when you come onto the 4-hour time frame, same thing. We get further confirmations of price consolidating out in these areas. Same thing here, a lot of consolidation to that zone. So if you're looking for a scalp opportunity, what we need to see happening here is price closing bullish above this, give us some form of break and retest above this area, and then a continuation back up. So either it could be a 3 candle break and retest, as we generally kind of target something like this, or even like this if you're looking for a bullish opportunity, or it could be a candle closing bullish right above here, something very similar to this right here, closing bullish and then holding on to a resistance, push back down, hold on to this area of support, and then could continue pushing back up bullish. So something like this here where price pushed up bullish, created that resistance, came back, held on to a support, and then continued pushing bullish from there. So any of those two, I would be looking for any buy opportunities for quick scalps. But other than that, these are going to be pretty much my range. So again, scalp to even day trade for 88 pips. But these two zones is something that I would say kind of stay away from. Now here at gold, we're here on the quarterly time frame again. I'm going to mark off 1900, which is the level that we have been targeting for a very long time. And then I am going to mark off this level that price just broke below. So let's just call it 1775. And then also, I'm going to mark off the support that price is pretty much approaching. If that's broken, then we can come back down and target into these areas. But I don't really anticipate that to happen until next week, unless we're getting very strong fundamentals coming out from the US, which is pushing gold even further down. And that's going to be our 1755 area. Let's drop down to the monthly time frame. We see how these levels pretty much check off. I'm going to remove this zone here just so we don't have any confusion just right now. But when we're looking at the monthly time frame and we're looking at these three levels, we see how this area here was a support, a previous resistance. Same thing down here, where this was a resistance as well and a support. We're pretty much in this range where we have seen price kind of tap into this area and reject off of it heavily. So this is an area where price has rejected off of heavily in the past. So these two areas right here, and then we see a nice sell-off right at these points, both of these points. And then same thing here where price created that resistance and then we saw a nice sell-off. This is also when we start to get better fundamentals when it comes to macro fundamentals, macroeconomic data in general. And then we start to see some economic growth happening across all economies. And that's when we started to push down here. When we come back up and we finally revisited this area in 2020 when COVID happened, we start to get some more fundamentals around vaccines and all of that. We came back, revisited this area here in general, pushed right back up. We came back, tried to create some lows, but we held on to this area of support overall. And you can see how price tends to reject off of this. So same thing here. This is why we really need to pay attention to this 1775 to 1755 range to see if price is just going to end up making some sort of support and can we see a continued push up, especially as the fear of recession is starting to continue in the US, and then also some market fears settling in, market uncertainties settling in when it comes to a lot of the growth economies, when it comes to a lot of the major economies, such as the UK, the Eurozone, the US, a lot of these economies. Can we start to see gold bouncing off of this area, grabbing liquidity, and then pushing back up to 1900, following a very similar move as it has here in the past? If price ends up breaking below this, again, that would, from a fundamental perspective, mean that there's more optimism kicking in when it comes to macro fundamentals and macroeconomic data. Then we'll come back and target these lows here around 1680, 1700 area. But as of right now, this week, this is what the range is. This is what I'm pretty much looking at to see how price is reacting between 1775 and 1755. Let's drop down to the weekly time frames. The same thing here, pretty much a further confirmation of what we have been seeing off the quarterly, off the monthly time frames here on the weekly as well. A massive sell-off that just happened this morning. So same thing, can we see something similar to this and price pushing right back up? If you want to narrow in your zones even more and kind of figure out exactly what level would be a no trade zone or anything like that, I would say map out this level right here, which has been a support here in the past, as you can see, gave you a break and retest and a nice bullish push up from there, bottom wick rejections and a nice bullish push up from there. So this is what would be my no trade range, but anything continuing down to it, I would look for potential scalp opportunities. When we come onto the daily time frame, so you can narrow your zone in even more, kind of see what happened at these levels, look to the left and pay attention to how price has been reacting at this level many times. So if I extend that to the left, we can see how price has consolidated at this level, held onto it as support as a break and retest, held onto it as resistance in the past and a massive sell-off. So we can see that, again, there's a lot of liquidity in this area as well. That's exactly where we were holding onto it as support as we closed out last week. And then when this week we made that top wick and flipped right back down and filled the previous weekly lows and daily lows, and price continue to push down between the 1775 area, and there's really nothing stopping it from coming all the way down to the 1755 range. So we do still have a lot of room for potential scalps and even day trade opportunities. You have starting off with 55 pips going into about 120 pips on gold, and then you want to see how price reacts here. That is a heavy seller's pressure, so we do have to wait for some sort of corrective moves here before we look for those continued sells or even look for buy opportunities. So as of right now, we don't have any indications of buys just yet. So we saw a lot of consolidation here on Sunday when the market opened up, and then we start to see a heavy sell-off yesterday pre-London session, and then a continued sell-off in New York session. So what I do want to see here is some sort of a corrective move. We did break out of this somewhat of a consolidation area into this area. As you can see, this is pretty much a consolidation. We've had a heavy sell-off. So what I do want to see is some corrective moves coming back up to 1790, maybe even 1800, and then a continued sell-off from there coming down to 1755. At the very minimum, what I do want to see 100% is resistance being formed at 1775 and then a continued sell-off. So either of these would be perfect sell opportunities coming down to 1755, and then wait for price to hold on to some sort of a support here. And then this is where the fundamentals kick in. So if we start to see further fears of potential recessions and then also interest rate hikes and anything like that, then I do expect price to bounce off of 1755 and continue back up. And that's when we can look for those potential buy opportunities. Now let's take a look at US30. So the first level I'm going to mark off is going to be the support right here. And we'll keep it at the same level as we have the last couple of weeks at 33,800. The next level that I'm going to mark off is going to be the bottom wick rejection of the previous quarterly low right here, which is at 29,700 area, 29,600 area. Either of those would be perfectly fine. That is also the previous wick rejection right here. The previous high that price formed before a massive sell-off, and this one again, COVID kicked in. Let's drop down to the monthly time frame, and what do we see here? So we've seen consolidation into these areas where price pretty much consolidated here, broke below it, finally made those top wick rejections, and then a massive sell-off. Last quarter, we made a bottom wick rejection right into this 29,700 area, pushed back up, and ended up closing above this level. This quarter, we already made a top wick. We're flipping back down. We came back and made these lows here today, and we're flipping back up, trying to do some corrective moves. So if I do want to see any sell opportunities here, take advantage of any sell opportunities, I do want to see a break and retest forming right into this level and then target this 29,700 area. There's really nothing stopping us from looking for sell opportunities, because when you look at these higher time frames, you can tell that we're clearly in a bearish market here. We had that bullish momentum in 2020, and we consolidated out at this level, and then we started this entire bearish momentum pushing back down. What we do see at each of these points is, again, these lower lows being formed, which is giving us that confirmation that we have broken out of this bullish momentum and we're pushing back down. So last couple of weeks, we pushed back up, created that lower high. We're starting to push back down. We've already broken the previous weekly lows. So again, this is further confirmation from the quarterly time frame, monthly time frame, and even the weekly time frame that we're simply looking for more sell opportunities. We just need to wait for our proper break and retest entries here. When we come on to the daily time frame, we saw how last week we consolidated out at this level, closed out last quarter, and then today we made that top wick rejection, pushed back down and broke all the lows here as well, and now we're coming back into this area. When you drop down to the lower time frames, it makes sense because it is a corrective move of this entire sell-off. So we held onto a support here, and as price is pushing down, we reject right into this area, and now we're pushing right back up here, kind of correcting out and creating some sort of resistance in this level. So if I'm looking for any sell opportunities here, what I do want to see is price holding on to a resistance right above this 30,500 area, and then the following couple of candles taking us right back down, then I would be targeting this support on the 4-hour time frame as the first TP, and then a continued sell-off, eventually coming down to this 29,700 area. So that's pretty much what I'm looking at the moment. If we're looking for any buy opportunities, again, we would need the fundamentals for that. But if we're going to look for any buy opportunities, I do want price to continue pushing above and clear out. For any clean buys, I want price to clear out above this 30,800 area, even 31,000 area, and then continue pushing up from there so we can ultimately come back and target this 31,600 area. And after that, there's all this clean traffic that we can follow up back up into this 32,800, even 33,000 area flat. As of right now, this is the entire area that I would kind of stay out of. If I'm looking for a sell, again, it would be below 30,500. For any buys, I would look for a clear break and retest, supports being formed around this 30,800, and then a continued buy up, eventually targeting 31,600. But again, a lot of this comes down to the fundamentals, given that it's an economic data heavy week. With that being said, this is pretty much the end of the weekly outlook. If you guys have any questions, feel free to drop a comment below or even message me on Instagram. That's the fastest way to get a reply from me at SharmaFX. Other than that, have a great week, everybody, and I will see you guys on Wednesday.